Today we're going to talk about energy drinks as an investment thesis, in particular Celcius stock, which was brought up by paying subscribers on our Discord server. Now, energy drinks are not a blue ocean total addressable market, meaning that there are lots of competitors out there. You go into gas stations in the United States, you see entire walls dedicated to peddling the latest flavor of energy drinks. The history is relatively interesting, and you have what started out as the biggest success story, Red Bull, privately traded company. Then you had Rockstar come along, and then Monster. We're going to talk a bit about those brands. You need to remember that consumers are fickle, and energy drinks are only one component of an alternative beverage category that's quite large. And our take on this initially was that whoever spends the most on marketing is going to be the preferred brand, and we're going to see why that may be the case with Celsius. And just remember that big names like Coke and Pepsi are the apex predators here. Now, when we look at Celsius stock, for whatever reason, it seems to be getting a lot of attention. That's probably because of the stock price performance. But what's interesting here, on the top there is the Google Trends for the ticker. On the bottom right, you see the stock price over the past 5 years. But on the lower left there, you see that what's called the simple valuation ratio. That's just market cap divided by annualized revenues. And you can see that's actually stabilized over the past 3 quarters at around 8. Our catalog average is around 6, so we wouldn't consider this to be overvalued. That was somewhat of a surprise, because you would think that with all the popularity around the stock at the moment that people would be exhibiting herd behavior. They probably are. But that hasn't affected valuations. What you'll see are these social media pundits that pass around stocks like trading cards, and this lemming behavior leads retail investors to become curious and all invest in the same sort of stocks. Strong past performance only amplifies this interest, and the reminder there is to always invest in companies, not stocks. And when you do that, you should start at the very top. And you can do that by looking at the GICS classification for this company. That's Global Industry Classification Standard. You see this handy set of codes that go all the way down to a classification called soft drinks and non-alcoholic beverages. So investing in Celsius is a bullish belief on the category of soft drinks, in particular energy drinks. Now, names in this industry classification include Coke, Pepsi, and Monster. Forget about past performance and focus on future growth potential if you're going to be an investor or are an investor in Celsius stock. Now, when we look at their product, you see the name here, functional energy. These references to health here, proprietary Meta Plus blend, essential vitamins, accelerates metabolism. So they claim that studies have shown a single serving of Celsius burns 100 to 140 calories. Well, maybe you should just try going to the gym or drinking water instead of spending money on these expensive beverages, and put that money into dividend stocks. You don't have to work so long. But be that as it may, they claim no sugar, no high fructose corn syrup or artificial colors or fake sugars like aspartame. So you can see the appeal here of this product against very sugary, unhealthy alternatives. And indeed, there are lots of those. These are just some of the names that we came across during our research. So, of course, the familiar Monster, Red Bull, Rockstar, you have Celsius, and many other brands, just some of those listed here. So the first thing we wanted to understand better was market share. So we took this data from Statista, July of 2023. You can see Red Bull at the top, 40% market share, Monster with around 34% market share because they bought Bang there. So those two need to be consolidated. And Celsius at around 6%. Now we have reason to believe that it may actually be higher. Now, when we look at Red Bull and Monster, they control nearly 3/4 of the market. We like to invest in leaders, not laggards, although Celsius is growing quite fast. Red Bull is out of the question. They're privately owned. And then we have Monster. So we were quite surprised to learn that when you look at Monster's decks, it seems like they do all this other stuff. But when it comes down to where they actually make their money, they derive around 92% of their total revenues from energy drinks. So that would be around $5.83 billion in 2022. Now, U.S. energy drink sales, that previous market share chart that we looked at was for the U.S. U.S. energy drink sales, $3.8 billion. So their 30% market share, because we assume they haven't rolled up the Bang numbers, implies around a $13 billion energy drink market in the United States alone. We can test that by then looking at the 6% 2022 market share that Celcius had at $755 million would be that implied number. Their actuals for 2022 are $617 million, so not that far off. However, they're annualized now because they're growing so fast, are around $1.5 billion, implying that their market share has probably doubled somewhere around, let's say, 10 to 12%. What you're going to see out there are a lot of pundits throwing around random numbers that they found from some research factory in Mumbai. Always do the math, and when you consider these sorts of themes, try to go to the horse's mouth. Here's the total addressable market from Monster, and this is very interesting. They talk about the alternative beverage category. This is from a research firm that focuses on this sort of stuff. This was taken from Monster's 10K. This category includes things like iced teas, lemonades, energy drinks, sports drinks, still waters, flavored sparkling beverages like seltzers, which are quite popular in the United States now. All these categories are substitutes and competing alternatives for energy drinks. They all need to be considered. So when you look at that entire category, the alternative beverage category, the sales in the United States for that category were estimated to be around $73 billion in the United States. So of that, as we said earlier, around $13 billion seems to be energy drinks, and they're growing quite rapidly along with this total category. Now, what's quite interesting is when you go outside the United States, sparkling waters are very popular. So this is my favorite sparkling water. I'm drinking it right now. This is Essentuki from Russia, and it's incredible. It has these essential healing properties numerous studies have shown. And once you venture outside the United States, things become a lot simpler, and drinking sparkling water is very enjoyable. I've never understood why that didn't take off in the United States. So when you look at what you do have in the States, it's just tons and tons of selection. Here are Monster's new products in 2022. So look at this stuff. It's just coating the walls of gas stations and stores where I don't know how anybody is able to make any decisions because there's so many different types of things to choose from. But you can see their new, look at that, Monster Energy Lewis Hamilton 44 Zero Sugar. Interesting. So certainly leveraging their strong brand partnerships and that zero sugar there, perhaps noticing the success of Celcius. But when you look at Monster versus Celcius, this is a chart here that shows their revenue growth over time. You notice a couple things. Monster's growing quite well, right, with their energy drinks are making up the majority of their revenues, vast majority. And of course, Celcius has nothing but energy drinks. That 2023 estimate there is simply their last quarter annualized for both companies. So you could see that Celcius is certainly starting to, because this isn't a blue ocean, stealing market share from whether that's their direct competitors or substitutes. Now, when we look at valuation, as we discussed earlier, we see that Celcius has a valuation of around 7.6, Monster at 8. So certainly you wouldn't consider these companies to be overvalued. As I said, our simple valuation ratio sitting in our catalog, I think close to probably several hundred stocks have that calculated, and it's sitting around 6. So we wouldn't consider either of these companies to be overvalued. They seem to be relatively valued around the same right now. But let's look at some profitability metrics, because that's where you start to see some differences. Now, in B school, we learned about Red Bull and guerrilla marketing. This is a classic example of a case study, I believe. In Red Bull's early years, they used to open up Red Bulls and leave them on tables and clubs and pour them out and put them into trash cans and create this fake social proof, which turned out to be a very important component for selling their drinks. And they because it was expensive to have sponsorships, they actually created their own events. So they were marketing geniuses. Now, you can pay for this stuff, social proof. You could pay for that all day long, but can you retain it? And that's the question here. So when you look at Monster versus Celcius, interesting numbers here. Top table's Monster. So you see gross profits declining over time. We can use Coke as a benchmark. That's lower right, 58%. So you see that Monster's moving away from that down to 50. Now you look at gross margin for Celcius, declining, sitting in the low 40s right now. So it should be higher. But here's what's notable. operating expenses as a percentage of net sales. Going back to that comment, we said, you can always pay for a lot of promotion to get people to drink your product, but is that sustainable? Look at the operating expenses as a percent of net sales for Celcius. So it's gone from 40% up to 66% in 2022. Compare that to Monster, which is increasing, but sitting around 25%, and our benchmark Coke at 33%. So Celcius is paying a lot for that growth. And when we look at their 10K, we see this interesting table here that you can keep an eye on. Their partnership with Pepsi is certainly something the Bulls will point to. They took an 8% ownership in Celcius. This was in August of 2022, and you can see how that's had a big impact on their sales. Their Pepsi now accounting for 22% of Celsius sales. And of course, the international growth opportunity, almost all of Celsius's revenues come from the United States. That's certainly a risk. And this Bloomberg piece, I'd highly recommend that if you're interested in the history. So, people will point to this Pepsi partnership as a big deal, but go and look at how these energy drink companies are passed around like trading cards with Pepsi and Coca-Cola. And this article here by Bloomberg, it says Celsius and what it takes to make it in the crowded market indeed for energy drinks. I took this excerpt. I thought it was interesting. This gentleman here, this Bloomberg analyst, I suppose, is talking about how he saw the cool people at the gym were drinking it. And he probably saw someone on Instagram drinking it. And then he posted about it on his own Instagram. And, it's publicly traded, somebody said. And this is the sort of herd behavior we talked about before, and the fact that people need social proof to drink something. But this is a very good, I believe it was a podcast that talks to an analyst that seems to really have defined the history and the prospects for Celsius. Now, when you look at MBAs will analyze this stuff to death, and they'll use things like a SWOT analysis, so strengths, weaknesses, opportunities, threats. This is for Monster, but you could just apply this pretty much to Celsius as well. So you talk about expanding existing portfolio as a strength, their distribution agreements with, for Monster, it's Coke, and for Celsius, it's Pepsi. They talk about strong sponsorships, consistently strong financials. Well, we argue that Monsters are stronger than Celsius, but at least not in relating to revenue growth, but the other metrics we looked at. They talk about heavy dependence on energy drinks for revenue, so they should, and they're trying to do that. Monster is expanding into other segments of that alternative beverage category. You see this threats, highly competitive, ready-to-drink market indeed. And when we look at a company like this, MBAs use this Porter's 5 forces. It's almost a joke because it can be quite useless. In this case, it's very useful. You look at these different components. Threat of new entrants. There's no barriers to entry to this thing at all. Brand loyalty, what is that? What are the switching costs? Nothing. So when you think about bargaining power of buyers here, price sensitivity, so that's something to consider there when you're looking at gross margins and those declining over time. Buyers' ability to substitute. Boy, there's so many substitutes for them. Switching costs, again, non-existent. Number of substitute products available. So this is an interesting way to look at Celsius, and it certainly doesn't make us view this company in a very good light. So Coke and Pepsi aren't worried about energy drinks going out of favor. These companies are the real players in these alternative segments, and they're playing across all those different niches. Single brand companies are a big risk because companies in the United States are stupid enough to play politics. So all it takes is one Bud Light moment and Celsius is screwed. Now there's certainly international growth opportunities, and Pepsi's push there drive that bull thesis, but climbing on board with the lemming herd rarely works out well for investors. Ask yourself this: would you invest in this company if you invested in shares and the market closed for 10 years? Oh, we certainly wouldn't invest in any case. We're content with our investment in Coca-Cola. When you look at Coke, this is a great slide. It shows their portfolio includes $21 billion brands. That's quite impressive. Some of these you might not recognize because they have great international presence. They also have dabbling in other bits here. You see, of course, Monster energy drinks there. They have an investment in Monster, and the Costa coffee shops. That's the second largest coffee house chain in the world, the largest in the UK that Coke owns. And when you start thinking about Pepsi and Coke, these are very interesting companies, both dividend champions. We did this piece here, Pepsi versus Coke, that you might be interested in. Give that a watch. Make sure to like this video, please, and subscribe to our channel. Thanks for taking the time to watch this today.